Hi friends, this is Jaik. Welcome to the second video about my journey towards a 100k portfolio. Today, I read an interesting news article. In addition to binge watching and baking bread, day trading among individual investors has taken off. Perhaps a full-blown mania has taken hold in buying and selling options and stocks, small lots. Friends, every investor needs a trading thesis. My thesis is pretty simple. In the long run, America will succeed, and therefore the probability of the stock market going up is high. All my investment strategies are around that idea. Their both thesis is not applicable when you day trade. When you day trade or buy options, probability is working against you, and at some point you will falter and lose your money. So, enough about that. Today I'll talk about my original plans, the plans I created when I started this account. I wanted my account to be conservative, to have dividend bearing ETFs and few stocks. I did not want any positions accounting for more than 5% of the overall portfolio. And my investment time horizon was 30 years or is 30 years. So when I started researching for ETFs that gives decent dividends, there was few obvious choices like SPY, not QQQ, SCHT and like. But being new, I was in the lookout for something that gives more dividends. And eventually my search led me to REITs. REITs are real estate investment trusts. So they are basically a real estate company. And by law, it needs to have its asset and income tied to real estate investment and must distribute at least 90% of its income to stockholders, taxable income to stockholders in the form of dividends. So if you look in the stock market, REITs are some of the highest income. So dividend gives the gives the highest amount of dividend for a specific security because they are giving 90% of that out. Long story short, because of the higher returns with REIT, I started buying into REIT ETFs because buying individual REITs is kind of a little bit risky. So why not just go with the herd and buy the REIT ETFs? There are plenty of them to choose from, which I'll show you. I have 13 of them in my account. But then once I started this, COVID hit, and because of the whole situation, my REITs are in a loss. But since my investment horizon is long term, it's fine. I'm not too worried. So let me go to my first REIT, which is FREL. This is 0.83% of my portfolio, 14% loss. Wow. And it gives a dividend of 4%. Next is V&Q. This is 1.87% of my portfolio, 9% profit, and 4.31% dividend. By the way, dividend yield is so this number that you see on the screen at 4.317 means that if you invest $100 into V&Q, you will get $4.31 out of it every year as dividend. This will come to your account. If you invest 100,000, that will be $4,317. That will be in your account as dividends. So if you have high dividend, that much money you're getting back into the account. Next is VNQI, 2.12% of my portfolio with a return of negative returns of 11%. Gives 10% dividend yield. So going back to the previous calculation, if you invested a million in this REIT, you would have lost almost more than 100,000. But then you'd get a dividend yield of 10%. So that's another 100,000 that you get back in. So in effect, it's cancelled. That is, in a year, if the price remains the same, you won't have any loss. That's a good thing with dividends. But the truth is, if they cannot maintain this dividend yield, the price of this security the REIT will go down more. So that's something to consider. Sometimes you see this higher dividend yield just because the price of the stock went down. So they might be maintaining that dividend yield for 1 or 2 months. So the yield will look high. So to give an example, let's say the stock was trading at $100 and was giving a dividend yield it had a dividend yield of 5. Basically, they were giving $5 out. Now the stock dropped 50% in value, which you'll see, it's true for many of the REITs in my account, dropped in value to $50. But let's say they're still giving that $5 dividend. What does that mean? That means that now you're getting a yield of 10%. It looks good, 10% dividend yield. But what you have to factor is your capital decreased from, let's say you invested 100,000, it became 50,000. So that's a big drop. So that is this is true for the stocks as well. When you see a high dividend yield, think about AT&T, think about Ford, they all have this high dividend yield just because the value of their stock went down, and the companies haven't cut their dividend yet. They can just cut it tomorrow. All they need is the blessings from the board of directors. So keep that in mind. Next one is IYR, 0.53% of my portfolio, and percent loss, 3.84 dividend yield. ICF, 0.52% of my portfolio, 8% loss, 3% dividend yield. REZ, 0.52% of my portfolio, 12% loss, and that's a 12% overall loss, and 3.73% dividend yield. REM, 0.57% of my portfolio, 44% loss, and of course, because it's such a huge loss, they haven't cut the dividends yet, so it shows 16. Next month, if they cut it, it will show fearless. USRT, 0.37% of a portfolio, 16% loss, dividend yield of 4%. KBWY, 0.38% of my portfolio, 28% loss, and 12% dividend yield. RWR, 0.53% of my portfolio, 18% loss, with a 4% dividend yield, 4.7, more like 5%. XLRE, 0.41% of my portfolio, 5% loss. If you see, it's only a $14 loss with $228 in equity value. These are all small positions with a 3.61% dividend yield. Next is SRET. It's a super, even during the regular times, it gives high dividends, so that much more volatile. So 2.18% of my portfolio, 26% loss, but this loss actually was 52% or 55 or something. I just averaged down when the market was low, and it gives a return of 16% a year. And SEHH, 0.54% of my portfolio, 20% loss, and it has a dividend yield of 3.92. So in summary, for my REITs, as of May 24th, 2020, let me just get to my 2020, 11.37% of my portfolio is invested in REITs ETF. Eventually, I would like to grow this number to 25% of my portfolio. However, I'm planning to do this only by dividend reinvestments and other profits from my portfolio. It's an extremely volatile time for real estate, especially commercial real estate. And the effects of this COVID situation will only be known in a few years' time. So I'm not injecting more direct cash into my REIT ETFs. Okay, this is getting into a longer video than I expected it to be. To summarize, day trading is bad. More than likely, people will lose their money, but investing is good. Also, in building up my dividend portfolio, I have 13 REIT ETFs, which accounts for 11.3% of my portfolio. By the way, I have like 39 securities in my account in total. In the next video, I will discuss other dividend ETFs in this account. So that's it for now. Oh, by the way, friends, this is an entertainment channel. Do your investment at your own risk. Also, portfolio update. By the way, don't look at this September 7, 2018. I don't really start investing much into this account at that time. I seriously started putting some money only last year, maybe around June time frame. So portfolio is at 55,298, 7.26% overall gain. Okay. So that's it for now. Until next time, stay safe, stay happy. Thank you.